Hello traders, Gary Wagner here. It is 11:47 in Honolulu, 5:47 in New York on Thursday, 12th day of May, 2022, and this is the Daily Report for gold and silver. Gold prices had a strong drop today, breaking below the 200-day moving average. Trading in New York took it to $1,820. That was a decline of $33 on the day. It is currently trading in Australia, showing it down $3.20, and that is a reference to a net change from the close in New York, which occurred a few hours ago. The primary force of gold moving lower was dollar strength. The dollar is up 0.9%. It is at a high that we have not seen since 2002. We'll look at that when we pull up some charts, but suffice it to say that what we witnessed today was the belief that the Federal Reserve will get extremely aggressive in terms of raising interest rates, and that led to dollar strength, and dollar strength led to massive selling pressure. Before I get to our chart section, we are looking at a screen print of the Kitco Gold Index, and at the time I took this, gold was fixed at $1,821.50, but you can see not only that it was a combination of selling pressure and dollar strength, but the vast majority of today's decline was selling pressure, $18.05, about a full percent of the decline of 1.7+%, and dollar strength accounted for $13.50, or the remaining 0.71%. It was a strengthening of market sentiment regarding future guidance of the Federal Reserve's monetary policy that led to extreme dollar strength. As you can see on this daily chart, we have been looking at a major level of a resistance that occurs roughly at 103.90. You can see that over this last week, unquestionably, it has tested this particular price point and on a closing basis was unsuccessful in each attempt. However, today was clearly different. It not only had a low that was above that price point, it opened and closed significantly above that price point. But to give you a real sense of how important on a technical basis the level that the dollar broke through today is, I need to pull up a 2-month chart. I have just put up a bi-monthly chart of the dollar index, and you can see even on the bi-monthly chart how significant this break was. The data set used, though, was really only incorporating the high of 103.98. That occurred at the beginning of 2017, down to this low here that occurred right around the beginning of 2018. However, if I compress it, you will get a better idea of how far back we have to go before we saw the dollar trade at this level was in the year 2001. So this is a very significant move above this level that we've identified, which brings us to our gold analysis. First, we did enter a trade yesterday. We were stopped out very, very quickly, resulting in a loss of $13, $1,300 per COMEX contract. We are currently flat with no active trade. I now want to address whether or not today's price decline resulted in major chart damage. The short answer is absolutely yes, for two reasons. First, gold pricing broke below a key and critical 200-day moving average. It also broke below a long data set's 61.8% Fibonacci retracement. We currently have gold trading overseas at $1,819. It has traded to a new low of 1809.10. On a technical basis, we have to acknowledge that there isn't any real major support in the market until approximately $1,766, but that is based upon a Fibonacci retracement set. But most importantly, we have to identify the fact that the recent decline in stocks strengthened the dollar, higher yields in treasuries, and decline in gold pricing is directly due to the fundamental events of changing market sentiment regarding the Federal Reserve and how quickly they'll raise rates, which means that at any moment we could see gold prices bottom and turn around, and technicals will not give us an indication of that. That being said, we will monitor the market closely and look to see where gold might find a bottom. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.